Stop looking at the chart for a second. Most people enter the market trying to figure out how to trade, how to buy low, how to sell high. But they miss the most important question in history. Why do these things even exist? Welcome to TradingBits X. This channel is all about decoding the economy from the ground up. No noise, just signal. Why did humanity invent the stock? Why did we create the bonds? Why do we treat a barrel of oil or a bar of gold like a financial instrument? If you don't understand the why, you're just gambling with pixels on a screen. But if you understand the purpose, you start to see the invisible threads that move the entire global economy. Today we're breaking down the trifecta of wealth: the stocks, bonds, and commodity. Not as symbol, but as the three engines that power civilization. The foundation. Let's zoom out. Every single economy on earth, from ancient Roman to Silicon Valley, is built on three fundamental needs. Innovation. Businesses need capital to build things. Security. Governments and institutions need to borrow money to function. Survival. Society needs raw physical resources to keep the lights on. Each of these needs birth at a specific asset class. The stocks are the vehicle for innovation. Bonds are the vehicle for debts. Commodities are the vehicle for resources. Before we dive in, I want to see where your head is at. If you have to put all your money into just one of these for the next 20 years, which one will be? Stocks, bonds, or commodities? Type below. I'm curious to see who's looking for growth and who's looking for safety. The stocks, the bet on humanity. Let's start with stock. When a company like Apple or Tesla wants to change the world, they have a problem. They need billions of dollars. They could go to a bank, but banks want their money back with interest, regardless of whether the company succeeded. So they do something brilliant. They create equity. A stock isn't just a flickering number on your phone. It's a fractional ownership. When you buy a stock, you are telling the company, hey, I believe in your future so much that I'm willing to give you my capital today in exchange for a piece of your soul and your profits. Why do they exist? Because they allow for unlimited upside. If the company grows 1,000%, your stock grows 1,000%. Stocks are a bet on productivity. When you buy the S&P 500, you aren't just buying the market. You're betting that humans be more efficient, more creative, and more hardworking tomorrow than they are today. If you're finding this system view helpful, do me a favor, smash that like button. It tells the algorithm that this community wants more why and less hype. And if you're new here, consider subscribe. We're building the most educating trading community on YouTube. Bonds, the engine of stability. Now let's talk about the quiet giant. Most retail traders ignore the bonds market because it's not sexy. But here's the truth. The bond market is the boss of the stock market. It is a massive, over $130 trillion. A bond is the opposite of a stock. It's not ownership, it's a loan. When a government wants to build a highway or a company needs to bridge a gap, they issue bonds. You give them money. They give you a legal promise to pay you back plus interest. Why do they exist? Because not everyone wants to a bet. Some people and huge institutions like pension funds want certainty. The stocks equals risk and growth. Bonds equals safety and income. Bonds are the temperature of the economy. When bonds yield move, everything else shakes. They are the benchmark for the cost of money. If you don't watch the bond market, you're flying a plane without an altimeter. Would you rather have a 10% chance to make $100,000 in stock or 100% chance to make $5,000 in bonds? Type A for gambling or B for the guarantee. Let's see your risk appetite. Commodities, the real world. Finally, we have commodities. Stocks and bonds are financial assets. They live in spreadsheets. Commodities are the real assets. They are the thing you can touch, smell and burn. Energy, oil and gas, metal, gold, copper, silver, agriculture, wheat, corn and coffee. Why do they exist? Because you can't build an iPhone with a stock option. You need copper. You can't run a logistic empire with bond deals. You need oil. Commodities are the inflation hedge. Unlike stocks, which depend on a CEO performance, commodities depend on the scarcity. If you want to know more about scarcity, I have a full video at the link above. If stocks are a bet on growth, commodities are often a bet on stress. When supply chains breaks, or war breaks out, the value of stuff goes up while the value of papers goes down. Think about this. If the price of gas doubled tomorrow, what happened to the profit of your favorite airline stocks? It crashes. See how they're connected? Share this video with one friend who thinks trading is just about reading green candles. Let's show them the real gear of machine. Connecting the dots. Here's the master keys. These three aren't just separate boxes. They are a living ecosystem. When commodity, oil, get too expensive, it creates inflation. To fight inflation, bonds, interest rates, most goes up. When bonds pay more, people sell their stocks because they want safety. It's a cycle, a dance. If you want to understand this dance, you stop being a trader and start being an strategist. So to summarize this for you, stocks, ownership and innovation, bonds, lending for stability, commodity, investing in scarcity. You now understand the what and the why, but there's one piece of the puzzle missing. These assets don't just move randomly, they move in time. The economy is a heartbeat. It expands, it peaks, it contracts, and it's recovered. And each of those phases, one of these three assets is the king, and the other one are the losers. If you want to know when to hold stocks and when to run to commodity, you need to understand cycles. That's exactly what we're going to cover in our next video. Click at the end of the screen to jump into the next lesson. If you enjoyed this video, please hit that like button and please consider to subscribe to TradingBits X, where we're building a community to understand how economy moves. And remember, money, markets, we're trading the future. See you in the next one.